Okay, so let's finish up. Still on regulatory framework, I've told you that for regulatory framework, we have the regulations and we have the regulatory bodies. The regulation are the rules and principles, they are the gap, and there are three sources of gap, which we have looked at. And we have also established the fact that rule and principle are not the same, they are different. And a country that uses a rule-based regulation, they have a rule-based framework, while the ones that use principles are principle-based framework. And I also established the fact that IFRS that we use in Nigeria or IAS is principle-based, just that now there are elements of rules there right now. So either way is okay, depending on the strength of the argument regarding why you are using rule or principle. There was a diet where I can ask for 15 marks. That was the advantages and disadvantages of a principle-based framework. And they also ask that what are the criticism of moving from a rule-based to a principle-based framework and like that. So both questions, you see it in your pack when we share it for 15 marks. Now, let's look at the regulatory bodies. And let's start with Nigeria. Who are the regulator when it comes to reporting in Nigeria? The regulator for financial reporting in Nigeria or for reporting generally in Nigeria is, do anybody know it? Who is in charge of reporting in Nigeria? Thank you very much. The Financial Reporting Council of what? FRCN. They were established in 2011. So Nigeria started adopting IFRS in 2011. So that's history. So there's an act backing them up, an act of 2011. So Financial Reporting Council of Nigeria, FRCN. Do you know who their MD is or their CEO? Rabiu Olowo. He was the former Commissioner of Finance of Lagos State. He did one term, then they moved him to FRCN. Now, these guys are the one in charge of reporting in Nigeria. When you qualify, you're expected to join them and get an FRCN number. In fact, anybody that wants to sign an annual report, anybody that wants to be an auditor, you must have an FRCN number. I mean, it was recently and last year when Rabi came that started getting invoices from them that I should come and pay. And I've joined them since almost 10 years ago. They now send one bill of close to 1 million. I should come and pay. Ha! Pay what? So apparently they are now active. The guy came in and wants to make some changes, and they are demanding for so much money. And if you don't pay, you might not be able to. They might collect your number, and if you don't have that number, it's a problem. They do a lot of work in terms of ensuring that our financial reports make sense, our financial statements make sense. Okay, so what they can ask for you in your exam is first is that you need to understand the objective of this body. And when they were established in 2011, they give them some key objectives. So I'll just tell you like 7 or 8 of them that I think you should know in case ICANN wants to ask you, right? So the first we'll learn here is the objectives of FRCN. Objective of FRCN. Number one, which is their most important objective, which is to protect the interests of investors and other stakeholders. This is their most important objective, to protect the interest of what? Investors and other stakeholders. And this makes sense because when you say that you are the one in charge of reporting, that means indirectly what you want to ensure is that investors and other stakeholders, their interest is protected. Their interest is protected. They are not cheated. And how do you do that? Then that takes us to their second objective. How they do that? And they do that by providing guidance, to provide guidance on issues on issues on issues relating to corporate governance, on issues relating to corporate governance and financial reports, to provide guidance on issues relating to corporate governance and financial reports. In order to protect the interest of investors, so of course they will teach companies about corporate governance and also about financial reports. They teach them about financial reports by teaching companies about accounting standards. Right? That's how they teach them how to prepare financial reports. And also for corporate governance, yes, they are also in charge of corporate governance too. And there is no way an entity can prepare a reliable and credible financial report if they don't have good corporate governance practices. Because when we say corporate governance, we are talking about the relationship between the MD and the CFO, relationship between the board and the management, right? If it is one person that is calling the shots in a company, that is a bad corporate governance because you are the one that will decide everything that happens. You can tell them to report revenue of 100 million where you have only made 20 million, right? That's a bad corporate governance. So they teach companies about how to have a good corporate governance structure. It's very important before you can protect the interest of investors and other stakeholders. So, yes, they provide guidance on issues relating to corporate governance and financial report. Now, when they have provided guidance, the next one is to now ensure that good corporate governance practices to ensure that good corporate governance practices are adopted in the public and private sector. So now we have taught you, then do it. So they won't just sit in their office and see that you are doing it. You see these guys going for audits, ensuring that every relevant company has a good corporate governance practices in place. So to ensure that good corporate governance practices are adopted in the public and private sector, not just private companies alone, even in the public sector, government entities, they need to have good corporate governance practices. Number 4, that's for corporate governance. Now, financial reporting is to ensure the reliability, and accuracy the reliability and accuracy of the financial reports. How do they do this? When, if you are the accountant of your company, immediately your company prepares their audited account, it is compulsory. Every company, they must submit their financial reports to FRCN. Every company, you are supposed to submit your financial report to FRCN. The FRCN will look at it and check it against compliance with IFRS. If they discover any infraction, they will invite you. They will invite all your consultants that, okay, why does this infraction exist? So that's how they ensure reliability and accuracy of the financial report. Number 5, to harmonize professional bodies that have inputs so they harmonize activities of professional bodies like ICANN, CITN, CIBN. They try as much as possible to harmonize their activities because one way or the other they have input. ICANN train accountants, CITN trains tax accountants, CIBN trains bankers. All of these people, they try to interfere and harmonize their affairs. Number 6 is that they ensure high quality of service. To ensure high quality of service among auditors, valuers, and actuaries. To ensure high quality of service among auditors, valuers, and actuaries. So, which is why when you qualify, you must register with them. They will be calling you for training. They will continually monitor your activity, especially if you are, let's say, the CFO or you're an auditor. You need to continue to comply with their standards and guidelines, right? So all of these they do just to ensure high quality of service. And this is not just accountants that register with FRCN. Anybody, any professional that have an input into the financial statement, whether you're a valuer, whether you're an actuary, whether you're a lawyer, if you have an input into the financial report, you must have an FRCN number. Otherwise, that company, if they use your input, that company will be in trouble. They must not use your input. You see, ultimately, all of these activities, do you know what it will do? To improve the credibility of the financial report. Ultimately. So, you see, the good thing about this, the objective is that they follow one. There's a way you can remember it in case they ask it in the exam. From the fact that from their first objective, which is the key one, all of them is trying to ensure this happens, to protect the interests of investors and other stakeholders. To do that, they will teach companies about corporate governance and financial reports. When they teach you, they will ensure that you are doing it. The corporate governance, do you have a good corporate governance structure? Is your financial report reliable and accurate? The professional bodies that are in charge, they will also look into their affairs. They will ensure you have high quality of service. Ultimately, when the credibility of financial reports improves, then we are protecting the interest of investors. So that's their core objective, to protect the interest of investors and other stakeholders. You see, from my explanation, you see that when you are a qualified accountant, as far as FRCN is concerned, there are some ethical issues that you might face. There are some ethical issues that can arise if you don't help them achieve this objective. For example, now, if you fail to register with FRCN or you fail to get an FRCN number as an accountant, it's an ethical issue and we strictly frown against it. As soon as you qualify, get an FRCN number. Number two, if you allow a person that does not have an FRCN number, if they have an input in your financial report, in your financial statement, that is also an ethical issue. They must not have an input in your financial report. Another one is that if these guys goes for audit, they go out for audit. When they come to your company for audit and you don't allow them access, it is an ethical issue. Okay? And even if you don't comply with IFRS itself, it is an ethical issue. Okay? So these are ethical issues that can arise if you don't help these guys to achieve their objective. And you'll see that these guys, most of their work, they have departments for it. There are people in charge of accounting standard. There are people in charge of auditing standards. There are people in charge of actuarial standards, valuation standards within FRCN, because they are the one in charge of most of these things, just ultimately to ensure that financial reporting makes sense in our country, in Nigeria. Okay, and that's the regulator in charge of financial reporting in Nigeria. So if they want to ask, I would expect ICANN to ask this. However, you need to understand that even though it is the Financial Reporting Council of Nigeria that are in charge of financial reporting in Nigeria, they are not the one that actually develop this IFRS. What we did in 2011 was to adopt IFRS. What did we do? We adopted it. We did not create it. And do you know the body that creates IFRS? Which body is that? IASB. Good idea. I think it's important we also look at that very briefly. Ordinarily, when in your exam, I will expect them to focus on FRCN, CA. But same to you, I'm coming. ACA. Those are our former students that have qualified. Hopefully, you guys too will qualify this diet. Well, those that are writing all the papers do. If you are splitting, then that will be next diet. Okay. Now, it's important you know the body that actually developed IFRS is not FRCN. Yes, FRCN ensure we do it right in Nigeria, but they are not the one that develops IFRS. So who does it? As far as IFRS is concerned, it is not a single body. They have like a framework too. They have collection of bodies that are in charge of FRC, that are in charge of IFRS, and they do it that way because IFRS, if I did not mention to you, is adopted by over 100 countries, and it's not a joke at all. So they put a solid framework behind it, and this is structure. They call it the IFRS foundation structure. And this IFRS foundation structure, it starts with the monitoring board. Then, from the monitoring board, it goes to the trustees of IFRS Foundation. From the trustees of IFRS Foundation, then we then have IASB and ISSB. Then, under IASB, we have the IFRS Interpretation Committee. And there is one particular one that is here. We call it IFRS Advisory Council. Okay, this is structure. This is structure behind IFRS in the world. It starts with the monitoring board. You see, this monitoring board, they majorly comprise of people we call capital market authorities. We call them capital market authorities. Capital market authorities. Do you know the capital market authority in Nigeria? SEC. Abi? Every country in the world has a capital market authority. So the capital market authorities in major continents, major countries, they are a member of this monitoring board. And this monitoring board, therefore, is like the boss of the boss in this structure. They are the one in charge of this structure. And it makes sense to have the capital market authority to be in charge. Like capital market authority in US, in Japan, in China, France, UK, mention it. They are a member here. IOSCO, International Organization of Security, Security Commissions, they are a member of this. And it makes sense. It makes serious sense. Because capital market authority, they are the one that are the regulator in each country to ensure listed companies prepare financial reports right? So SEC, for example, now ensure that every company that is listed does not, has a credible financial report. For us to now have capital market authorities to be the boss of those in charge of IFRS, it makes sense because they are the one that understand the reporting needs of investors. They are the one in charge. So in this way now, this ensure that this structure has something we call public accountability. Because is the people that is in charge. Is the capital market authorities representing investors all over the world. So they are publicly accountable. They don't do things the way they want. They do it the way the market wants. They do it the way investors want. Because it's the investors, it's the capital market authority that is in charge. So monitoring board comprises capital market authority. They ensure public accountability. Now, you see, this monitoring board then fire some people who call the trustees of the IFRS Foundation. Now, the trustees of the IFRS Foundation, they are now the one that now has the oversight. They do governance, they do strategy about how to develop standards. We call them trustees. The body itself is the IFRS Foundation. The members there are what? Trustees. And these trustees of the IFRS Foundation, when they develop them, their most important objective is to develop a single and global accounting standard in public interest. The IFRS Foundation, when they were developed, their key mandate is to develop a single and what? Global accounting standard in public interest. So when we say who is responsible, which specific body is responsible for developing IFRS, is the IFRS Foundation. Because that's their object. They are the one responsible for that. Number two is to promote the use and rigorous application to promote the use and what? Rigorous application of the accounting standard, which they have done very well. Now, over 100 countries uses IFRS all over the world. So, they have really promoted the use. Number three is to take care of the need of SMEs and imagine what? And imagine economies. To take care of the needs of SMEs and emerging economies. This actually helped them to gain a lot of countries that now use IFRS because they focused on SMEs and emerging economies. That is why most countries in Africa uses IFRS. Most countries in Asia uses IFRS. Most countries in South America uses IFRS. Australia uses IFRS. They focused on those emerging economies and that helped them. And finally is to harmonize or converge to ensure harmonization or convergence of reporting standards. To ensure harmonization or convergence of reporting standards. Okay, so these were their 4 objectives. Number 3, I said to take care of the needs of SMEs and emerging economies. And I mentioned that this really helped them because when they started, they focused on SMEs and emerging economies. They really focused on that. And that is why most countries in Africa adopt IFRS because emerging economies. Most countries in Asia adopt IFRS, emerging economy. Most countries in South America, Argentina, Brazil, all of those countries, they adopt IFRS. Australia, they adopt IFRS. Most Antarctica, they adopt IFRS. They really focused on that, and it helped them promote the use. And that's why over 100 countries, over 120 countries use IFRS as of today. If you know IFRS, you can work anywhere in Africa, anywhere in the world, because that is what is applicable everywhere. You just probably will need to get their professional other courses that are specific, then you're good to go as an accountant. You can work anywhere now. And of course, they ensure harmonization and convergence of reporting standard. They know that it is not all countries that will adopt IFRS. As of today, the United States is not adopting IFRS. So they use this approach for them, harmonization and convergence. So they are trying to make IFRS similar to the US GAAP. Since US don't want to adopt, then fine. Can we make it similar? That is harmonization. That is convergence. And they are doing it very well. Most of the new standards they are issuing now, they are now similar to the US GAAP. Right? So when you know IFRS, One way or the other, you know the US gap too. So ultimately, this guy will achieve this. They have not totally achieved this to have a single high quality global accounting standard, but they will, right? With this, their key objectives. As a corporate reporting student, I believe strongly that you need to know this very well in case they ask it in your exam. This is the most important part of this structure. They are the one that has the vision and they run with it. In order to achieve this vision, they have this body under them. Do you know the full meaning of ISB? What's the full meaning? International Accounting Standard Board. Do you know the focus of this one? IFRS. So they have delegated this objective one to these guys. So that's why you will not be wrong if I ask you that who develops IFRS and you say ISB, I won't say you are wrong because these guys have delegated it to him. But who has the vision? Who has the fall? If these guys don't do their job, who will fall for it? These guys. They are the one that actually has that vision. Who knows the full meaning of ISSB? Okay, International Sustainability Standard Board. International Sustainability Standard Board. This one came in Nigeria. We started it around 2023, but they were actually established recently in 2021. They are very new, and they are focused on sustainability standards. So I'm going to teach you sustainability reporting, right? Not how to prepare the report, but more of understanding what sustainability reporting is all about. So sustainability reporting has been fragmented and scattered here and there before they established this body. When this body came in, they are now putting it together. There is now a single go-to when you want to prepare sustainability reports. Before now, there are a lot of bodies that come up with standards on sustainability reports. But with ISSB, we now have like a single body that is in charge of sustainability reporting. Because sustainability is very, very important right now in the world, especially with the issues around climate change, especially with the issues around gender equality. It's important that companies report their impacts on their environment and how they are ensuring that they are running or operating sustainably so that they won't destroy everything before the next decade, right? So a lot of companies now have sustainability reports, even in Nigeria. So when I teach you sustainability reporting, hopefully you have the time to look at some samples reports so that you can understand it deeply. But for now, this is the body responsible for sustainability reporting in the world, ISSB. Right now, they have issued two standards, right? We call it IFRS Sustainability Disclosure Standard. They issue what? IFRS Sustainability Disclosure Standard. It's not in your syllabus right now for you to know that, but we believe they might change syllabus. Not here, not now. So I won't really be focusing more on that, but I will just give you like some overview knowledge of it. Okay, and the final one here is the IFRS Interpretation Committee. So IFRS Interpretation Committee. And from the name, you can guess what they do. They make interpretations on IFRS. Abi? Interpretations. But when you look at that closely, why do we need interpretations on IFRS? Is it that because the standard is so advanced, or because the standard cannot be understandable? No, not because of that. They come up with interpretations on two occasions. On two occasions. Number one is when we have a standard and there are differing opinions on how we apply the standard. That there are different knowledgeable people, sets, that are saying that this is how you should apply it, and there's another set that is saying, no, this is how we should apply it. It is necessary they come up with an interpretation and no, this is how it should be. So that is when interpretation usually come up, when there are different opinions on application of an accounting standard. Secondly, they come up with an interpretation where we don't have an IFRS on an issue or a transaction. When you have a transaction that we don't have an existing standard, then they come up with an interpretation pending when they will issue standards. Like for example now, cryptocurrency, that is now one of the popular financial assets we have right now. We don't have a standard on that. So what they have done right now is to come up with an interpretation on how you account for investment in cryptocurrency. How do you present it in your books? So those are the two occasions or two scenarios where you find an interpretation on IFRS. Okay, we are not going to teach you IFRS interpretation. I mean, from the outline I gave you, it's not there. But when you qualify, these are things you need to study up and understand interpretations that exist in reporting. It's not in your syllabus for us to know now. Okay, that's the IFRS Interpretation Committee. Then we have the IFRS Advisory Council. You will see, I just rule it from year to year because from their name, they are there to provide advice. Okay, they provide advice to the trustees, they provide advice to the standard setting body and also the committee. And how do they provide that advice? You see, listen up. Majorly, this guy serves as a link. They serve as a link between these people, this structure, and the public. When I say public, I mean professionals in practice. So when these people are setting or are working, they usually need inputs from professionals in public. Those inputs are gotten through these people. So these people will help them communicate with the public. Then they will come back to them that this is what we got for you. So they serve as a link between the public and the structure, right? So that's how they provide advice that is highly needed. Okay, I mean, it's a long story, but these are things you have to know for your exam. This is the body or the structure responsible for IFRS in the world, from the monitoring board to the trustees of IFRS Foundation, then to the experts, the standard setting experts. There's no reason why one of you that are here cannot one day work with these guys. I mean, be in charge of creating standards for people in the world. That would be a nice work to do. Or to be a committee that come up with an interpretation on IFRS. You see that these guys have to be experts. They have to be people that have worked with, they have international exposure. You might have even worked in one or two component, maybe in Africa, Europe, one on one continent. So you have international exposure and be ready to develop standard that is usable all over the world. Now, finally for today, is that, you see, when it comes to IFRS, right, when they want to develop it, it's not something some set of people sit in a corner, some expert genius sit in a corner and develop. No, that's not the way it works. They can't get it right. They usually use the wisdom of the public. They use the wisdom of the majority. So IFRS is a collective effort by everybody. They ensure everybody participates. The best of the best ensure participates. And it shows in the step that is taken in developing IFRS. If you look at the steps they use in developing IFRS, the first step, they call it consultation. Let me call it a public consultation. This is the first step. They would, you see, every 5 years, They usually review what they call a working paper. They usually have working papers, which they will have, not working paper, work plan. They usually have like a work plan that they have been developing over 5 years. And in this work plan, all they put there are accounting challenges, accounting problems that have been existing over those periods. They will codify it in a work plan. So you see these guys engaging with the public every now and then just to ensure or to understand which accounting challenges do we have, which IFRS are we finding difficult to apply. They are putting all of these challenges in a work plan. That's public consultation. And it's not them that are developing this accounting problem. They can't know. It's the people that are in practice, accountants, CFOs, auditors, tax consultants, all professionals. They're the one that will know what accounting challenges we have. So these guys, they codify it in a work. And that's the first step when they want to develop standards or they want to amend a standard, is to develop a what? A work plan. Through a what? Through public consultation. And this, every 5 years, they look at that work plan. And by the time they review this work plan at the end of a 5 year term, then they will then decide, should we develop standard on any of these problems? Before they make that decision, they go into research phase. They will conduct a research into this problem. Just like most of you, if you're a graduate or you have masters, you see, before you leave school, you do field work, you do research projects, and your research topic is a problem. We call it research problem, which you are going to go to the field, get data, analyze the data using certain models, come up with a conclusion recommendation. That is what these guys do with this accounting problem too. They carry out research. And their own research also, they get inputs from the public. And the report of that research, you will find it in what we call discussion paper. This discussion paper, they will share it with everybody. You will look at, okay, what's the outcome? What's the conclusion on each of the accounting problem in that work plan? It will be well detailed systematically in the discussion paper. You see, from this discussion paper now, which is the report from the research, they can then know which standard should we work on, right? Where should we start from? And that takes us to the third step, which is the standard setting process. The standard setting phase itself. The standard setting phase. And you see, from here now, they know which standard they want to amend or develop. Then they will go to step 3. The first thing they do in step 3 is to do a proposal for a standard. Okay, this is standard we want to develop. This is name. This is how we want to recognize it. They will have different options for recognition, different options for measurement. It's always very lengthy. A proposal for a new standard. And this proposal for a new standard, you'll find it in what we call an exposure draft. You find it where? In an exposure draft. You can Google exposure draft. There are a lot that they have issued. It's always bigger than the standard itself. Now, they will send this exposure draft to the public. And they are not just sending it just for you to read it. You would send in your comments, your opinions. They will update it. They can be on this phase. The same thing they do for the discussion paper. The same thing they do in each of these phases. They will send it to people. People will make comments. People will update it. They would make all adjustments to it. Ultimately, they will get to IFRS or IAS. They will get to the phase of what? IFRS or IAS. After the exposure draft, then they can then issue the what? I mean, what I've just told you now is steps in developing or amending IFRS. These are the steps from public consultation through a work plan to research phase, where they come up with a discussion paper, to standard setting phase, where they will have an exposure draft, which is a proposal for standards, and eventually becomes an IFRS. I mean, the beautiful thing is that after they have issued this standard, these guys also have maintenance phase. And maintenance phase again is a cycle. It's a cycle that will go into public consultation. Then they will start again. So they don't stop working. It's a continuous effort that they put in developing standards. So at the maintenance phase, they have something we call post-implementation review, just to be sure that this standard that we have issued, can people apply it? Is it applicable? Are there challenges in its application? So they would review all of that at this phase. So I think it's important for you to know the steps in developing standards. Okay, so we are done for our class today. So what we have achieved today, is a very important part.